So we need price to break out from either of these zones. So the breakout can either come from below or above. Such a case like this, we have something that breaks out, then retest, then buys further. Or in some other cases, sorry. Alright, so this is symmetrical triangle, and we can either expect the breakout from the top or the support, either ways. So this is where we as a trader need to be very patient to be sure that we don't rush in. If you're going to buy or sell, we must have seen at least 2 occurrences or 3 occurrences in the market before you can take a buy or a sell within a symmetrical triangle. And you must be very cautious. Once you've taken first and second trade within this triangle, it is advised that you don't take more, because eventually there must be a breakout from either of these sides, and you must be trading with a stop loss. So if you are selling here, your stop loss should be at the initial high before this. So if I'm selling here, I'll put my stop loss here. If I'm selling here, my stop loss will be here. And if I'm selling here, my stop loss will be here. So whatever makes the market breaks out of this and breaks this high, it implies that this symmetrical triangle is no longer valid. I hope understanding. So once it does that, be patient with it. After it does that, there is what we call a break and retest. Market breaks, then retest, then buys further. The same thing is going to do in the support zone too. So once you see a breakout, this is what you expect to do. A break and retest, then market does this, either in the support or in the resistance zone. So this is for a symmetrical triangle. And now we have next we have an ascending triangle. What does an ascending triangle imply? An ascending triangle implies that we have a triangle that is descending in price, as ascending in price, but there is a level of resistance above it that is what? Horizontal. For example, we have this. This is an example. This is an example of an ascending triangle. Market is buying and selling, but buyers are increasing in price. Buyers are increasing prices by the level of demand, but they've not been able to supply above. Why? Because there is a threshold above them. So when they eventually find time and space to break the threshold, what happens? It breaks above. Mostly an ascending triangle is always breaking at resistance zone, because the buyer has more potentials and more strength in pushing prices. So and at that point, it breaks, retest, then keeps buying. Did you get this? And then keeps buying. The same goes for the descending triangle. When we come again, we see the descending triangle. The same goes for the descending triangle as well. So we have similarly what occurs in the ascending as well as the descending. And where is the higher chance of we having a breakout in this chart pattern? Please, any answer from the room? Where is the possible point of having? Where is the possible point? Yes, of having a breakout in a descending triangle? Is it in the resistance zone or in the support zone? The chart box, please. Where is it most likely for us to have a breakout in a descending triangle like this? Are we in the class? Where is the possible point of breakout in such a pattern like this? Is it in the resistance zone or in the support zone? Are we all online and attentive? Because I'm certainly not sure. Okay, I mean which particular point? Is it on the support zone or on the resistance zone? Not particular. I didn't mean in third one. I didn't mean in point. If there's potentially going to be a breakout, where are we going to have a breakout? Is it on the resistance zone or the support zone? So most likely it's a descending triangle. So the higher chance of having a breakout comes from the support zone. Why? Because the seller has more intense power in pushing price. Yeah, the seller has more power in pushing price down. So whenever we see things like this, a descending triangle, let us be with the opinion that we're expecting price to pump out of the resistance zone. So whenever you are seeing this, you can do more of selling than buying. And whenever you are seeing an ascending, you are doing more of buying than selling. So when price sells down, you can then buy conveniently. So once it gets here, you can close out. When it sells here to the point, buy again. When you get here, so at some point there will be a major breakout from either the resistance of an ascending or support of a descending. But for a symmetrical triangle, there is no particular point where we can have a breakout. Why? Because there is no particular winning side in price. Buyer is neither winning nor sellers are neither the sellers are they winning. They are both tussling and cuddling with price at a particular time loop rather. They are selling and buying at a particular time loop. They just keep descending and the cost keeps ascending. So instead of them to increase in price, they are reducing in price. So imagine, look at how wide it used to be until it started growing, consolidating. So when it consolidates to a point that it could no longer follow the symmetrical zone anymore, then a breakout will occur at either of this zone. So which implies that at this point, it is most likely dangerous to even be buying and selling without stop loss. Because once you buy and bracket price breaks out, it might not return back to your zone or your entry zone. See, probably another time that you might be lucky to have price favor you, which I don't know. So that aside that. So we have the double top. The double top is what looks like an hem. Whenever you see an hem, it implies a double top. This implies a double top. And this is what we call the neckline of a double top. This is the neckline of a double top. So when price does this, price must have been struggling to break out within a two equal points. Sometimes we are always having triple top. When price tries it first time, it comes to the neckline. After getting the neckline, sometimes you find it difficult to also break the neckline, or you might just break it a little bit, then it returns to the top again to do another triple top. An example like this, could get here, break below, then come here, create a triple top, then sell. Now this is almost looking like an head and shoulder crown pattern, but no, it is not. Why? Because the head is not above the shoulder. So if you're going to regard this as an head and shoulder, the head here, the middle triangle here, has to be above the shoulder. So this can be regarded as what? Triple top. But what we are treating is not triple top, it's what? A double top. So price needs to pump back to the resistance, then break through the neckline, then create a double top. And as a retail trader, you should have stepped out of the trade from the neckline, because there's higher chance of of price pushing back to this point and then sell, or push back then break. So whatever we are doing, we are basing our judgment cautiously, and we are not clouding our judgment with our emotions. Then we have what we call again the double bottom, which is the opposite of double top. So it's just the opposite and reverse of what that one does, is what this one will do. So I believe we understand this already. So that's all about that. Then we have head and shoulder crown pattern. So head and shoulder crown pattern comes in this form. There must be an existing shoulder. Now price now went far up, but price was able to break this top, then went far up to a bit and started coming down again, but could not break this neckline, and it went back. And at this point, price could not break this shoulder, so then it respected the other shoulder, then price begins to fall. This is regarded as what? Head and shoulder crown pattern, which is head and the shoulder crown pattern. Then you once price integrated here, is an indication for you to what? Sell short the market. So you can respect it, then short the market by selling from here. Then your stop loss might probably be at the top of this head and shoulder crown pattern. Then your take profits can then be at this neckline or so. Or you can just put your stop loss within a value here. So once the market breaks out of this initial shoulder, it will no longer be regarded as head and shoulder anymore. Why? Because one shoulder is already higher potentially. So it might not, sometimes it might be a little bit, it still doesn't count. It is still head and shoulder. But once the difference of the breakout is too wide, for example, if it breaks out like this is no longer head and shoulder crown pattern anymore. But if it is like this, it is still head and shoulder crown pattern. If it's like this, it is still head and shoulder crown pattern. Head and shoulder crown pattern. But once it's like this, it is no longer head and shoulder crown pattern anymore. So let's pay attention to that. So the same way we have the reverse, which is the what? The reverse head and shoulder crown pattern. So let's see what the chart talks about in all of these topics. So we have the symmetrical triangle. We realize that price ranged within two equal high and low, and eventually you realize that we have another image showing that price was able to break out from that symmetrical triangle potentially. And there are different type of breakouts in the market. Let us note this. There are different type of breakouts. There are different types of breakouts in the market. And we have, for example, I missed this. There are different types of breakouts in the market, and we have, for example, when price does not break, when the body of a candle does not break through the angle, it is not regarded as a potential breakout. For example, if it was the shadow, look at this now. Can you see this? The shadow breakout, but the body was not involved in the breaking out. So it won't be regarded as what? Breakout. It could just be called what? A fake out of the angle. Then price needs to return back in, do some corrections, then come back and break out with the whole body sitting on or sitting in between the triangle or the symmetrical, the ascending, the descending, whatever support or resistance zone. When there's a breakout, there has to be a potential body of the candle on the angle. So that can be regarded as what? Potential breakout. Then after that, price will travel, and that's all about the symmetrical. Then the ascending, and we see this now, we see an ascending price from the below and a static price from the above, which means the sellers are static at some point. They are not being able to increase their levels, but the buyers are increasing their level by higher high, higher high, higher high. Do you get it? Till there will eventually be a potential breakout from this zone, and which is what we are seeing now. Can you see the real body breakout? So we have what we call the descending, the low highs that begins to drop, 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 which is low high, low high, low highs, low highs, which means we're having each lows. We can't regard them as lower because they are not going within one price. So they are just low highs, low highs, low highs, low highs. This is the high lows. The descending is regarded as the high lows. The high lows is higher, the higher and the lows, the high and the lows, the high and the lows. For this, the lows and the high, the low and the high. This is the descending, and eventually the breakout comes out from what? From the support zone. Look at it. Finally, price breakout supports, the sellers wins the battle. So just know that whenever you are seeing trade pattern, trade structure, it implies that price is trading within a particular structure, and at the end of the whole journey of the structure, there must be a breakout from price in the market. So for example, now a descending breaks below, an ascending breaks above, a symmetrical breaks either in both ways. So you need to be very cautious whenever you are in a symmetrical triangle, and you need to be very, very cautious whenever you are in either of the triangles, because it implies that price needs to follow the structure of the market. Do we get it? So that's that about that. So for example, now double top, we spoke about this neckline and how the opposite of it. The head and shoulder clamp pattern, we spoke about it all. But the most important thing about them is one has to take profit at each neckline. So I gave us an assignment last week, which I'll also be giving today again. I would like us to go and reach page 72, 72 and 73 of School of Pipsology. The School of Pipsology, please. I would like us to reach page 72 and 73 ahead of next week Monday, because we'll be starting another topic from tomorrow, which is the ICT trading strategy. And I'm very sorry, at this point things will begin to get complex and a bit hard. So it's important that we are attentive, we are available in class. So it's good you are available and also you watch the video after the class, because it helps you jog your memory about what you've learned. So I'm not sure if it's going to be easy by watching the video, but of course it will. But then we can do justice to make sure we show up in tomorrow's class, as we will be having one of our guest speaker to take us in the ICT trading strategy. Then from there I will take it up with us and we'll run with it. So please read 72, page 72 and 73 ahead of next Monday, and we see how far God. Okay, the materials will be sent to us then. For those that are just joined, we will send all the materials that we'll be using for the class. And we are still far, we are going far, but we are still on this one material. So, but God will help us. God will help us. So, in that case, that will be all for today's class. Do we have any question? Let's take question, please. Questions, do we have? All right. Okay, so I'm glad it's clear. Any other person? Yeah, sure. It will be released or failing before Wednesday or today preferably. Alright, so guys, have a nice day, and I hope we are getting on with our $50 account. Please start trading your $50 account and be posting your results, be sending your results to the group. Yeah, it will be uploaded. Alright, no problem. The class will be uploaded. I'll upload them today or tomorrow or before Wednesday. I just need to do some editing on them because the videos are really junked up, so I need to do a serious editing. So I'll get everything fixed before Wednesday or Thursday. It should be hope. So please, our $50 account should start running. I told you guys to open a $50 account and ensure that you are trading it and you are growing it. Even if it is $2, you are mounting it up in a daily basis. I don't mind how much you are doing. Just make sure you are scaling it. When I mean scaling, you are not jumping by just making $20 today, $40 today. No, scale it bit by bit. And then when you scale bit by bit, I started an account of $50. That was last 2 weeks. The account is in $160 now by just scaling. I can enter the market maybe 2 times or 3 times a day, sometimes once, sometimes not even. I don't trade sometimes in a day when I don't see anything. So scaling by scaling, account of $50 has gotten to $150, which is I've done 200% of the whole investment has been done, which is what bank will not do in a year. Of course they do it, but they are the one eating it up. But they give you your return as 1 to 6%, 1 to 5% as maximum in a year. So let's start the scaling of the $50 account with all. I've given us enough knowledge to start, but of course we are transitioning in the acquisition of the knowledge. So, but however the case may be, let's start trading the account. I am not responsible to give anybody signals, because giving you signal makes you a lazy trader, dependent trader, and it doesn't make you better. So it only makes you have results from my results. And when you have results from a result, does not make you a better trader. So you can't want to spend a lot to learn and you're still sitting on someone else's signal. Oh, of course not. You are not helping yourself. Because sooner or later, you want to be on your own and start tricking trades. Just take your trade, sleep off, and know what you're doing. Do you get it? So please, let's start with that. And from today, tomorrow, every profit and losses you are having, post them on the signals, and as you are posting them, you are writing the reason why you lost. Do you get it? And I want to be addressing all the results. I personally will be addressing all the results. Once you have a loss or a profit, post the reason why you lost, post the reason why you made profits, and I will address it and see, okay, this is working well. And make sure you are trading within your appropriate lot sizing. So that is what determines your risk and level of risk to reward. So God bless us and have a nice day, everyone. Thanks for joining the class. See you guys tomorrow. And please don't be late tomorrow because we'll be having a guest. So have a nice day, everybody.